Hey everyone, welcome back to Upside Down Data. Today I want to talk a bit more about Bitcoin and whether or not this rally can continue. I want to talk a bit about the bearish indications, things that might lead to caution, at least in the short term, and also the bullish signs that might mean that maybe this rally is more than just a bear market rally. So let's go ahead and get into it. So this rally has been quite impressive off the lows. If we just kind of measure from the beginning of this move up to where we are now, we're up about 40%. And I had made a video a while ago back on the 8th of this month saying, conditions were starting to look favorable for Bitcoin and for crypto. And then, off to the races we went. But in that video, I also said that we want to be a little bit cautious in terms of where we think this rally might be able to go or how high it might be able to go for some different reasons. I want to talk about some of those reasons and some new ones in a minute that might argue that this general level we're at now at around, currently as I'm recording this, about 22.8K, this kind of general level might act as pretty strong resistance. Then also talk about some other data that might suggest that further moves to the upside are not implausible. So let's go ahead and do that. So the first thing I just want to mention is just looking at the volume profile over kind of this general range. So ever since we've been kind of price been in this level, let's kind of bring this in here. Let's just look at where the volume breaks down around these levels. So if we show it, we can see that there's kind of these two chunks that we can see. So a huge chunk of volume transpired down at these kind of levels where we are right now. We're just getting towards the top of that kind of chunk here as we get up. This one ends here around 24K. And then there's kind of a gap that exists between about 24K and about 29K, where there's not really a whole lot of volume that transacted, and then suddenly you get a bunch more once you get up to around the 30K region. The reason why this can be important to watch is it reflects the possibility of cost bases as one possible reason. If a lot of people traded Bitcoin down around here, people probably have a lot of cost basis. Price still exists around these levels, and people might, if they bought up around here, back here, and then watched Bitcoin drop all the way down to 15K, maybe they're just waiting for Bitcoin to get back up to their cost basis to cash out. And so maybe there's some resistance. Now we have sliced through this far, and one possibility is that if we can slice above this level, there might actually be not really a whole lot of resistance left in through here, except for people who might just be choosing to, just sell, kind of lock in a profit until you get up to these levels. And assuming market participants are looking at similar data, they might just say, well, why would I sell here if I think it's likely we'll make it to at least here? And so you might see price kind of move quickly through this level, just like it did moving quickly down into this level before. Now, this is just a technical indicator. This just looks like volume, in terms of the market, where were a lot of Bitcoin traded. We can also look on chain to see, literally where are Bitcoin held in terms of their cost. When did people accumulate Bitcoin into their wallets? At what price did that happen? And that's what we're looking at here with this realized price distribution. And so realized price is basically the price at which Bitcoin was spent. And the idea is that if someone spent the Bitcoin, someone received it, someone bought it, and then the person who bought it, it became their cost basis. So whatever monetary value it moved at would become the new cost basis, whoever took it. And so we can get a very similar view that we're just getting with that volume profile if we look over here at this indicator. And you can see this is what we talked about, in my last video, where we have been down around here. I've excluded the younger coins, so anything below 3 months, just because those tend to be very quickly traded. People who haven't been holding, short-term holders tend to trade in positions quite quickly. So in terms of kind of longer-term holders, where do they hold their cost basis? And people have been holding for 3 months. Maybe they'd say, all right, I'm at break even. I just want to sell if price gets back up to my cost basis. But we talked about in that earlier video that I made towards the beginning of the month, this region that Bitcoin's currently trading in right now, there's this big kind of swell in the number of Bitcoin that are held here from 3 months onwards. You can see this kind of big block. Now we are trading towards the top end, right around here currently, but there is still some more resistance, right? There is still more reason for this to be acting as resistance. And it's exactly what we've seen. If we just look at the Bitcoin price, the exact levels where Bitcoin's kind of had to catch a breath are more or less along those levels at which there are these big increases in the number of on-chain realized cost basis, or realized price, so the cost basis for these holders. But again, if we can clear above that level, specifically above around 23K, and then especially if we can get up to around 24K, so similar to what we're seeing with the volume profile, There's not a whole lot left until you get up, 27, there's a spike here, but it's really the 29.5, 30K kind of range where the rest kind of sits. And you'll note that there's a lot less here than there is, currently sitting at this level. And so there is some reason to believe that if we can really show some strength, we might be able to chunk into this level pretty decently. We might be able to slice into this chunk to a reasonable level. So this is kind of both, more of a bearish thing and potentially bullish. Basically, it's saying that at these current levels, these are really important levels, and we very easily could get rejected from them if enough people decide to sell their Bitcoin at these levels. But if they don't, if the people buying down here are really set on waiting until we get to higher prices before realizing profit, if they're not happy with a 40% move to the upside, then maybe that means there's not going to be a whole lot of selling pressure to enter the market all at once. And then if new demand enters the space, it can bring price up further, or potentially even, participants wanting to add to their positions here instead of just selling. We don't know. We're going to have to see what happens, but that's, one possibility. So to move on to some other data, so I want to pull up some data that we have and some charts that we have to talk about this a bit more. So another potentially worrying sign in the short term, or a reason to be cautious, is just how kind of extended the market's already getting from the perspective of the short-term UDPI. So what I'm showing you here are actually the only assets that we're following that currently have negative UDPI levels. UDPI levels below zero, kind of below that neutral point. And this is only about 30%. We follow currently 27 different assets. I believe it's around 27. And so this is around about 30% of them that have a UDPI level below zero. The rest of them are all above zero. And also, if we just look at the Bitcoin chart, we can see that as well. So this is a short-term UDPI across time. If you're not familiar with the UDPI, it's basically our risk model. It quantifies how much upside versus downside potential is plausible for an asset. And we have this for different time periods. I think short-term is most informative right now because that's kind of what we're talking about. Can this rally continue, at the very least in the short term? Let's talk about the short-term UDPI. And so what it's showing right now is a level of above zero. It's about 0.6 right now. And what's notable about that, if we look at kind of prior bearish periods, or if we just look back here, this is kind of the general level at which we topped out back, in March of 2022 before we went and moved down to the downside. So if you think that this is just a bear market rally and nothing more, you'd probably expect it to tap out at around these levels. If we continue to go on further, we're getting something more similar to what happened in 2019. You'll notice that happening there. Not to say that we'd have to realize that much. The UDPI is a smart model. It is not going to be thinking that an explosive move as extreme as 2019 would only get you to this level. It's probably going to see a higher level here. And I actually had made a video a few days ago where we simulated if we redid 2019, where would the UDPI level go? And this short-term UDPI would go higher than it would have gone in 2019. But just if we did get a rally, we could see some rally a little bit higher. But really, if you think this is a bear market rally, this is around about the level that you'd expect the UDPI to have to stop. Now, does that mean that the rally has to be over if that happens, if we roll over here? Well, not necessarily. What happened in 2019 is we had this big initial impulse, and then we had to spend some time cooling off before we got that final impulse up into the top. And you'll see the short-term UDPI getting extended, cooling off, and then going back up again. You could see a similar thing happen here where we kind of have to catch our breath at around this kind of general level, the 20 to 24K range. Short-term UDPI cool off and then go for the final move later on. But if we're talking about short-term, it's very plausible to think that this could be acting as resistance. This could be about as high as we could hope to go in the short-term UDPI before rolling over again. Nothing guaranteed. We could go off and have something more like 2019, but there's reason to think that at least in the short term, if this is just a bear market rally, we won't. If it's something more like 2019, that might be possible. So now I want to talk a little bit about maybe some hopeful signs, the things to look at that might suggest that this might not just be a bear market rally, or at least that it could go something more meaningful than a bear market rally. Not necessarily a full 2019, but something more explosive, more longer term, more continuous than just a short-term blip that's going to roll over and send us back down. Let's talk about that. So what I want to talk about first from that perspective is the momentum bias indicator, or MBI. So this quantifies momentum in the market. So if you're positive on the MBI, that's positive momentum bias. That tends to really, price will shoot up as you're getting to these really extended, MBI levels until you really go after those blow-off tops, those blow-off momentum tops that tend to end, mark the tops of cycles of the bull market. Then also, if you're spending a lot more time in the red than the green, that's bear market behavior. And until this rally right here, we had been in steadfastly bear market territory on the MBI. You'll notice, we had this kind of telltale behavior where we tried to reestablish positive momentum bias back here in March, got rejected, went lower, tried to again, didn't even make it there, got rejected, ultimately went lower. And now finally, we're getting some real positive momentum bias built up for Bitcoin. Just look at how extended we're getting already. And what's notable about this, and what I wanted to talk about, is that this level on the MBI is not something you see very often in the downward phases of bear markets. In fact, we've never seen this kind of MBI reading in the downward phase of a bear market. This is now higher than this breakout this failed breakout that we had here in 2015 before going lower. We're higher than that. And we're higher than any of these attempts in 2018 to get back into positive momentum before ultimately going lower. So obviously this time could be different, and this might not mean anything. Maybe we go up and we just go right back down, set new lows. But that would be different, right? That would be a new behavior for Bitcoin should we do that. In fact, if you look at the past, this is much more similar to behavior like this in 2015, that first beginning of kind of that relief from the bear market into the next bull phase, here and here. Also back here in 2012, similar level, this first big push up that then led into the bull market. And then also 2019, this big first move up here that came down a little bit as we corrected, then moved back up again. This looks a heck of a lot more like those times than it does like these times. Now again, there's a first time for everything, so this is no guarantee. But if historical trends are any indication, it looks a heck of a lot more like this than it does like this. And I think that's important to note. And what I'd really be looking for personally to maybe make me believe that we're exiting the down phase of the bear market and maybe going back into the up phase where the lows probably are in, is we can start doing that thing that I've talked about before, where we start behaving like this. We spend some time in the green, then kind of oscillate around zero for a while, and then eventually we explode. And so what I might look at is a more notable rally, maybe continuing off of where we are. And then maybe we have to go down and we correct, but then maybe we're getting more into a phase where instead of the momentum being biased to the downside and price really moving down, then we have these corrections, but then we're starting to set in higher highs and higher lows instead of lower highs and lower lows. So this is a great first step for that to be a possibility. This is not in and of itself enough for us to say, yep, 100%, the lows are in, bull market's back on. But it's a good first step. And so we're going to want to keep watching this and other factors to see if this plays out. Now, obviously none of this is financial advice. You just make your own opinion of what you think these mean. And again, it's first time for everything. But the final thing I did just want to talk about here before wrapping up was another short-term factor I think is going to be important to keep in mind to see if we can have that more realistic continued rally from here that might end up making us even more, be able to be more confident in the signal that the MBI looks like it might be flashing, and to think that we might be able to realize more of that short-term upside potential, that Bitcoin has. Even though it's above zero, it's not that far above zero, and so it is possible for us to keep going. And that is looking at the stock market. And I talked about this in previous videos. I think it's important to talk about it now, where if we look at the S&P 500, one of the major stock indexes, then what you can see is that we had this kind of downward sloping resistance ever since January of 22, right? And we've touched it once, twice, 3 times, 4 times, 5 times we've been rejected off of this, 1, 2, 3, 4, 5. But look what's happening today as I record this on the 23rd of January. We're trying to break above. Now it's too early to get too excited because, we did wick above it back here in December before getting rejected and going back down. So what I'd really like to see is a close above it today and then continuation in the coming days this week to really become more confident. But I think that if we can decisively break above that, and also that would coincide with the decisive break above the 200-day moving average, which is happening to more or less be coinciding with that downward sloping resistance line. If we can do that and really kind of get the market to believe that the stock market might be back, that risk on is the appetite to have right now, basically broader conditions that are indicative of risk on versus risk off. I think that's the kind of backdrop that Bitcoin might need to be able to continue on its merry way if it wants to continue rallying up from here. If we don't see that, if we get rejected from this trend line again, or more or less getting rejected by the 200-day moving average again, we move back down, especially if we take out these lows, go back down, in my opinion, it would be very difficult for Bitcoin it would be difficult to realistically expect Bitcoin to continue rallying in that kind of broader condition where people might just say, all right, confirmation of risk off, I'm not going to YOLO into crypto right now because, the indication is that that's not the right position to be in right now. So too early to tell, but this is what's something I'm going to keep a very close eye on in the coming days. And if we can decisively break out from here, that might give that fuel that crypto and Bitcoin needs to be able to continue moving up in the future. So to sum up, I think there's two different ways you can look at it. I think right now is a very critical junction for Bitcoin for can we continue to move. We saw that first big move that I said was, plausible back, around here. We got it. And so some people might just say, that's it, going to take profits, going to be done. Whereas others might be waiting for that next leg up. And so, we've looked at how it's very possible that next leg might not even come. Just from a technical perspective and an on-chain perspective, there's a lot of reason to think this could act as resistance. We might fail to break out. But if we do, we know that Bitcoin's starting to behave more like it does at the beginning of bull markets, or at least at the end of the downside of bear markets, than it does during those downsides of bear markets. And we also know that, at least in the short term, there's a possibility for the stock market to give some favorable conditions. So not financial advice, but my outlook is that I think it could go either way. And I really think it depends how things like the stock market and broader markets continue to move or break in the next coming weeks to really dictate how crypto will go. I don't think crypto is leading the party. I think crypto is being allowed to rally because of broader market conditions. If those market conditions continue, I think the rally could continue as well. All right, if you like the content, remember to subscribe to the channel, give the video a like and follow us on Twitter. A lot of updates about indicators and more over there.